What's up, security token market? We are back again with episode 2 of our 6-part series, Tokenization for Institutions, What You Need to Know, with none other than Arca. The goal of this series, as a reminder, is to usher in the tokenization playbook to institutions across the map, as tokenization is one of the more under-the-radar verticals within digital assets to date. Last episode, we talked blockchain transferred funds and institutional use cases with Gerald David, the president of Arca. In this episode, we're joined by Arca's own head of institutional, Annelise Osborne. Thanks for coming on, Annelise. Before we get into it, let's all introduce ourselves, and I'll start. So I'm Jonah Schulman, head of communications at Security Token Market. We are a leading provider of security token data and research. We track over 200 plus tokenized assets totaling over $18 billion in market cap. And fun fact, the security token secondary trading market cap is already almost 20x this year. So we're hitting exponential growth and it's very exciting. And if you want to learn more, head to stmarket.com. Peter?
Awesome. I'm Peter Gaffney, head of research at Security Token Advisors, the consulting and advisory arm of the company. We help clients across the real estate, private equity, venture capital, even private companies looking to issue their own security token offerings to raise capital or to tokenize existing assets. And we provide a lot of research and materials for industry partners themselves, help them interact and create a nice, robust ecosystem, which is necessary going forward. And my favorite part about that is working with industry partners themselves, one of which, Annelise, we have her right over here, and I'm excited to learn a bit about her and Arca Labs and what's going on over there. Annelise.
Thank you guys so much for having me. I really appreciate it. I look forward to our conversation. I'm Annelise Osborne. I'm head of institutional at Arca Labs. I got into the space in 2018 and 19, and then I had a bit of a hiatus, and now I'm back. Really looking forward to drive institutional adoption of digital assets. I have a kind of career in corporate. I spent 12 years at Moody's running different teams within commercial real estate finance. So I have credit, real estate, investment structuring, and now blockchain and tokenization and structuring as well. So Arca, JD's talked to you about Arca last time at Arca Labs, but just briefly, Arca is an investment manager that is based generally in California. And we have 4 funds. We've been around about 4 years. Arca Labs, which is what I'm a part of, is really the innovation side of Arca. And so we've created, we've kind of identified some problems to solve and created 2 public structures now. One is the BTF fund that JD talked about. Another is Arcoin that we're really looking to use for collateral treasury management, and even we're looking into securities lending. And we have a couple other projects we're looking to launch in the next kind of few weeks, months. But what my job within is really kind of the external. So it's really looking at kind of driving adoption of digital assets and working with institutions. So we did a study with Coalition Greenwich, and 77% of the respondents had said that they think all securities will be digital in the next 5 to 10 years. And so that's kind of where we see the market. And that's what I look at my job is trying to help create those traditional finance securities in digital format.
That's awesome, Annelise. And I saw that survey with Coalition Greenwich. It's great. I love the securities lending side, and that's great. If you guys are working on something with that, I'm excited to kind of see that come to fruition. And like you said with JD last week, we were talking about Arcoin and the BTF model. And it seems to me it's all like kind of creating the playbook for institutions to leverage themselves and to kind of bring to fruition, right? And that's great to see. So I would love, what I'm really curious about today, I know Jonah is, and I'm sure that the viewers are, is kind of what you think specifically, Annelise, what the industry needs or what these institutions need to kind of work with that playbook or understand it better or bring it to the market in general. So I would love to hear your thoughts about anything that you think is necessary right now is to kind of get it on the radar of these institutions or help them kind of usher in this new technology. So would love to hear your thoughts in general.
Sure. So if you look at kind of the front page and the headlines now, I think a couple years ago, you didn't really see as much about crypto, and it was really Bitcoin, and people thought blockchain was Bitcoin. But now there's generally headlines. I mean, I would say the front page of the Wall Street Journal, but we do so much digitally now, it's not necessarily the front page, right? But the headlines and front page being with stories about crypto and blockchain, right? And that the fact that they're separated, that kind of 2 different markets. So blockchain obviously is the technology behind different cryptocurrencies. So I think there's a lot of companies that are really interested and trying to figure it out and what that means. So I feel like that's really where I come in. But if we take a step back and kind of look at what the problems were initially and kind of then how we grow, I think that might help. So I would think probably identifying 3 or 4 issues initially. So one, I think structures that came out weren't necessarily regulatory compliant. So I think when we first came out with structures for some deals, they like the ICO, for example. So there was there was fraud in the ICO market. Not everything was, but I think it got a really negative connotations when we were dealing with that, and institutions don't want to touch that. 2, I think the first people to recognize the technology were entrepreneurs and tech people. And so when they're coming out and trying to solve problems they think might be in finance, they don't have the experience and know how deals are structured, or having actually worked in the space, fully understanding regulation. So I think that that was a problem as well. I think that's different now, because if you look at a lot of these companies like Arca, like I come from the traditional finance side, and I recognize what can be done, and you kind of see, once you get it, you see all the different opportunities. So I think that's changing. 3, I think regulation, obviously, like the regulatory clarity is in question for some. I think we'll see that as well as working with institutions. I think, I work a lot with banks and asset managers who are highly regulated. I think they're not going to be the first adopters. I think the adopters, really just because they deal with regulation. I think they want to play in the space, but I think they'll, come in second or third, right? When things are more mainstream, and more has been ironed out. So that's kind of, I guess the 4th might be interoperability. So that was kind of an issue I think we had before with trying to figure out some of these legacy systems that were built on top of each other, dealing with different, regulatory compliance, perhaps within some of the banks. But I think there's tech people that are solving that. So I don't think that's as much, or, I think we can get past that. And then from a growth perspective, I think institutional adoption, I think, as I kind of said before, some of the larger banks, asset managers, I think are going to be a little bit slow to adopt just because they are so regulated. I think our opportunities are going to come with some of the companies, maybe mid-size and small, that will help develop structures, and they recognize the benefit of blockchain and will kind of take the step towards being the first ones to launch. So I think a lot of the first movers have like this are kind of the innovative thinkers. So there's more headlines that they're moving with technology and innovation. If you look at the ETFs, right? In the ETF world, ProShares launched the first Bitcoin futures ETF, and they got 90% of the market share. So I think there are benefits to going, because then 2 were launched right after, and they just weren't able to catch up. So I think there are benefits to first mover advantage. So there's that. And then I also think certain sectors will work themselves out. I think you can't automatically use blockchain for everything or digital assets for everything. I think you're going to find different areas where it works. So I think, I'm a huge believer in fixed income and how we can do fixed income on chain, or we can do kind of bonds on chain. We're doing a lot in the fund world. So we're doing tokenizing different funds, or sleeves of funds, or different formats. We're also working kind of, obviously, in the real estate, there's a lot of talk about different ways to do things within real estate. So it depends on kind of what the companies are looking to do. So if the companies are looking to find, different types of investors, or just recognizing the investors they have, what the benefit is to them, kind of, because if you can put it in a digital format, obviously it's more, transferable, it's more traceable, that you can have more access to information. Sorry if I'm rambling. If you look at Reg Ds, right? If you have private placements, it's always perceived that the seller knows more than the buyer, right? But if you're able to do that digitally, and everyone has access to value the information on that asset, which is what you can do with blockchain, then hopefully it will decrease that bid-ask spread. So that's kind of for one aspect. Others have like the optionality of trading out early, right? So you can actually, use a current structure that you have today, and you can tokenize that or digitize that, however you want to look at it. And it gives you the optionality of getting out. Like if we do tokenized structure, you can hold them as book entry, right? Mm-hmm. So if you take a fund today, or take, a real estate asset today, or take whatever it is that you're working on, you can, we're still working with transfer agents. And the broker dealer can hold that in book entry form, or you can take it as a token. So it kind of is, it's just an additional optionality. And I think that's a step towards adoption as well, right? Because you can have the same structure that you have today, and then you can also have the same structure you have today, but take it in digital format. So that's kind of, there's different steps towards institutional adoption that we're working on. So those are some ideas.
That's great. Yeah, the transfer agents are actually probably driving adoption more than we give them credit for that fact. They could have the traditional investors and the digital investors together under one umbrella. So props to them and all that. I love what you said about digitizing the private equity funds as well. We're seeing a lot of interest as let's say side funds that are going to co-invest with the main fund, so as to not intertwine right now and to kind of dip their toes into the digitalization world. So I think that's fantastic to see.
Yeah, no, I think there's a lot of, we are working out certain things because not everybody wants a daily calculated NAV, right? But there are different ways to work around it, and we really think that we can help create traditional finance structures. That's the other thing is if you create a totally funky structure on a new technology, I don't feel that finance is broken. I feel like we could upgrade finance.
It's more of an evolution more than a revolution.
Exactly, right? So if you take too funky, and a new technology, it's really hard for adoption. But if we can take traditional finance structures today, working within regulatory compliance, I think that's how we move the market.
I agree with that a lot. And going back to what you're saying, I totally agree. There's this negative sentiment around ICOs. And anytime you hear the word, a lot of times when people hear the word blockchain or Bitcoin, they run, right? And that's still a thing that we're dealing with today. I agree with everything you're saying. We kind of need some sort of a rebrand, obviously not change the terminology. That would be too confusing. But let's be honest with ourselves. What do we need to get that, adoption? Is it regulatory clarity? Do we have enough regulatory clarity? Because I would argue we technically do, as you guys have proven with the Arcoin, is you were the first 40 Act investment fund to get SEC approval and then also have the blockchain components on top of that. Do we need additional rules to make it clear? Do we need early adopters to pro shares to jump in and be we made all this money, we had all these benefits, we had all these clients come in and tokenize their shares and they got liquidity and oh my God, I want to do that. Do we need a big name? What is going to be the main catalyst in your opinion?
So I think one is working with the regulators like we did before, and we continue to do. So I don't think the regulators are trying to say, no, don't do any of this. Right. I think one big part of that is education for everyone, right? I think it's education for regulators. I think it's education for lawmakers. I think it's education for institutions and what we can do and how we can do it. So I think that's one step. I think working with the regulators to incorporate their feedback and explain to them this works this way, and when they get comfortable with the structure, because their job honestly is to protect investment and to protect investors. Mm-hmm. And so they're generally reactive as opposed to proactive. And so I think we can kind of build on it that way. I also think part of it is the rails in place. So when we're helping develop, if you look at kind of the adoption of cryptos, for example, right? So I think it was really kind of mainstream and for more retail and global. And I think then you would have family offices get in it, and then you get some asset managers and investment managers. So I don't feel like the banks were the first buyers of Bitcoin, right? So because you also have, how do you hold it in a wallet? Is it secure? Is it custom? My first conversations with Bitcoin when it first came out, the person that was teaching me about it was well, they can steal it out of your wallet. So, do you really want to get it? Which was a long time ago and not nearly as much as stolen. But another thing about it is it's traceable, right? So if you look into what's happened with a lot of these hacking incidents, they've happened in centralized areas, right? Mm-hmm. For the most part. And a lot of it has been recouped because we're talking about technology, right, which is traceable. And that's another thing with securities, right? If you have the securities, who owns all these securities because there's KYC and AML involved, mm-hmm. right? So if you have a token and you lose your token or it gets stolen, then you cancel that, and burn a new one. So it's not it's not a concern of security in that sense that I see it. It's not like you have gold that someone's stolen and you're never going to be able to get it back, right? And there's no evidence left.
Yeah.
I think addition.
No, I totally agree with that. And I think a lot of people, they see a lot of activity on illegal activity on Bitcoin and blockchain, and they don't realize like there's a lot of illegal activity with cash, right? And you can't trace that. You can trace everything on the blockchain. You know, it's pseudo anonymous, but at least you can find them. Exactly. And also building off your point is, I do agree that the rails are, you know, not exactly clear right now. They're somewhat, you know, you have to understand how to work in blockchain. I think if we somehow mirror the traditional financial infrastructure so we can work with institutions and those specific compliance officers who are looking into investment opportunities that are tokenized and something along those lines, is that in the blockchain will just be the underlying infrastructure, but it will mirror the exact situation and process that the traditional financial system does it. And they'll just realize and see all the benefits that come with tokenization, digitization. Then I think they'll be like, oh yeah, like why wouldn't we do this?
No, I think that I agree. I totally agree. I think also there's going to be a lot of cost savings when we get
exactly.
And I think the first iteration, I kind of look at like there'll be different phases, I think, of adoption. So the first is kind of working with the company, you know, with companies, maybe not the large scale banks, asset managers, but working with companies creating products, and those will create rails that then we'll be able to mimic as it grows larger and larger. Because I think that's what will happen, right? We'll start with this issuance and we'll tokenize this fund or this asset or whatever it is, you know, we're stepping up to from a first perspective, and then we'll do it. It'll kind of get bigger, and people will get more comfortable with the wallets and with the rails that pay through. And think about it, you can use stablecoin to pay, you know, bonds, and it can go into your wallet. So I think there's a whole bunch of benefits kind of from the front end. I think there's a lot of benefits from the back end as well. Once we use blockchain, that yes, people will recognize that it's more efficient and we're saving money. So it's just getting those, you know, getting the companies used to the flow and working out the flow that we'll get from the first generation of this process before we get like the second generation where whole sectors of finance step into it.
Totally. Yeah, I saw a statistic. I mean, at the end of the day, it's inevitable that this adoption is going to happen, because I don't think it's really blockchain that is what's going to do it. It's exactly what you said. It's cost savings. Institutions are always trying to save money. If they can save millions, if not billions, why wouldn't they do it? I saw a statistic from, I believe Paxos is doing settlement with securities. They did a partnership with Bank of America, Paxos Global. They have a settlement division on a permission blockchain. And I believe, it maybe not be exactly this, but it was a very high number in terms of cost savings, maybe like 70% of the traditional transaction versus using a blockchain. So that's massive savings. Think about all the securities that go through the settlement process there.
No, I think it'll be a big difference. I think we'll be able to do smaller deals, you know, because the costs are going to be smaller lower for different securitized products. And you know, I think there's a lot of way, but part of it as well is a POC or a pilot is going to be hard to show that real cost savings. You have to implement it as a program. So I remember we had calculated, this was, again, these are my opinions. This was not when I was at Arca, but we kind of calculated what we thought would be saving for some of these deals. And it was around 75 basis points, I think. And then if you look at, you know, Figure has created a big program, and they're working in debt, and I have a lot of experience on the debt side. And they actually have been able to prove they've saved more than that. So, and it seems small, but there's, to your point, there's trillions of dollars going through the system all the time. So, you know, that's all adds up, and it's a lot of money.
Yeah, Figure's pioneering some good stuff over there. I think Mike Cagney quoted Provenance blockchain is saving like 1% to 3% on their securitized assets, which is great when you're looking at billions, trillions of dollars, like you just said. So if we could use that as a model and roll it out even more, I mean, it's easy to try to apply that to every industry. And like, you know, I use that 1% to 3% as just an easy metric. But obviously it'll depend on what you're really looking at. But I mean, like you're saying, I mean, debt is so big and so expansive and widespread. If you could apply that same model to different industries on that front, it's perfect. So
yeah, so we're at Arca, we're looking at really kind of moving this forward, because we're true believers that assets will be digital. And so and we're long-term players, right? So we work with a lot of the institutions we'll talk to, want to play in the space and want to do something, but they don't know what they want to do, right? So we'll kind of go in and talk to them and give them some ideas, you know, maybe 3 options, and then maybe that works, maybe it doesn't work, and then we'll go in and give them another 3. But we're in it for the long haul. So even when it takes time, it will happen. I'm a firm believer, and the institution. So we'll get there.
Definitely. Absolutely. So on that kind of front, what do you think in terms of industry players? I mean, obviously we can't do everything ourselves. We need the transfer agents, the broker dealers, we need alternative trading systems and secondary marketplaces. Who are the people that you guys are working with that you think can drive like institutional adoption more than anything? Is there any updates on that front or anything you want to speak on?
No, we have, we have a lot of different partners, and we pride ourselves in trying to really work with everyone in the ecosystem. I think it really is people that have the experience and recognition of regulation, people that have the finance experience that recognize how deals are done and what you should and shouldn't do or could and couldn't do. So I think that makes a big player is being above board. We need more thought power in the space, right? I think everybody adds to the I think it's a rising tide raises all ships, right? So I think we all need to continue to do what we're doing because there's so much out there to be done, which is really, taking this all to the next step. So I think it's great out there, all of our partners now. We'll continue to work with new partners as well. So I guess that would be my answer, right? Professional people that are coming up with new structures and new ideas and new fixing problems.
Yeah, absolutely. I think, and I'm sure the most fun topic is what are the use cases? And you kind of touched upon it before when you're talking to people. Let me lay out 3 cases. If they like anything, sure. If not, we'll move on. We'll find 3 new ones. What do you think are if you have a short list, what are the biggest drivers in terms of use cases? Like what is the most attention getting and the most applicable right now? If you have anything on that.
So a lot of people are looking for liquidity. I think liquidity is hard. It's really touchy, right? I ran a broker dealer before, so there's no guaranteed liquidity for anything. Also, right now, there's not a lot on the second. There's not most anything happening on the secondary market. Very little happening on the secondary market, and so until you have a market established with buyers and sellers, so that's hard to promise. But it doesn't mean that we're not going to get there. So the thought of a path to liquidity, I think there's some people that are looking to offer the option to sell out in advance, right? So you don't have to hold the security for the life of or the investment for the life of the investment, which is, there's a lot of investors that are looking for that optionality. I think we have, what are some other, I think, the transparency. I think people are looking for being more open about, what they're offering from an investment perspective. I think transferability is similar to optionality and stepping out before. I think there's the kind of the immediate taking down, like the transfer. I mean, we had developed Arcoin, which is we spoke about before, but if you look at settlement right now, right? Settlement is still extended. And so I think there's options to speed that up, which leads to cost savings. So I think that is something that we really work on as well, which just could be an internal back office, which doesn't sound as sexy, but it is, if you think about what you're doing, it is very exciting.
Yeah, most definitely.
What else? So a lot of people are looking to get more investors as well, right? And to find some way into the retail. A lot of the institutions are, because there's such a large dollar figure if you think about accessing different investors. And so that is definitely something that's talked about. And the thought process of this bringing it to a different level in peer-to-peer trading. Mm-hmm. So I think a lot of people have different ideas of what they're looking for. But those are kind of some of the general ones and ones that we hit a lot.
It's funny. I usually think of, the product level for these funds and say, oh, let's tokenize this asset class, issue it to the, to the investor crowd. But like you said, and even our convo with JD last week about Arcoin as like collateral management and treasury management, I was like, wow, this could present even more opportunities right off the bat, like in the back office operational level than the investment level. So I kind of shifted my thinking as well and said, hey, it may be tough to usher in these products as this way, but if we can start with the back office and, like you're saying, build the rails that are necessary to roll out further, that could be an even better play in the near term, and even I saw like Franklin Templeton announced their blockchain settled mutual fund. I think it only has like 2 million assets. It was announced back in September or October. So the on-chain money market fund. And I was thinking like, mutual funds price on a daily basis at the end of the day for the next day. So I was thinking, hey, what are the real benefits of tokenizing that or issuing that on the blockchain? Will that make it act more like an ETF, or maybe they're just batching everything together on the blockchain to cut out the back office and to kind of reduce that? And it all comes back to limiting the fees, reducing fees, increasing the bottom line. So I'm very curious to see that kind of come more to market and see how that really affects the mutual fund market in general, and maybe start competing with the ETFs, as we know the growth rates are changing on that front. But all interesting stuff, and it comes back to looking at it at the back office level from an operational standpoint and all that.
No, it's really exciting. And then from the front office, from the institution, like a lot of the deal sizes for institutions are huge, right? So it's really difficult to mix with retail. But it's exciting because I think we're going to get there. But offering retail people institutional products, and so I think that's what some institutions want to do. But if you look at if you're going to buy a building or raise a fund, you're like, it's $100 million. Let's just say $100 million, right? And so it's hard to get $100 million worth of retail into one investment. And right now, how it is you have institutions, and institutions are the buyers, right? And so it doesn't mean that it can't be tokenized. It's just you have to have an institution that is ready to accept it, either in the book entry or token form that we were talking about. And institutions generally want to play with institutions. They generally don't want to play with other as the one institution. And so I think there's some structural things that we're working on, and some education in mind, the thought process behind it all. And a lot of it comes down to, the lawyers and what the lawyers think. But I think we'll get there from the front office perspective, but there's definitely the back office perspective and servicing. I just think there's so much that can be done in servicing, so many errors that can be admitted when things become digital, because then we're not dealing with bespoke spreadsheets, we're dealing with calculations, and smart securities. So it's exciting. Again, I truly think we'll get there, and it's taken longer than we thought a couple years ago, but I think there's a lot more activity and a lot more even more clarity, even though there's lack of regulatory clarity. We have developed things, right? And the market continues to develop.
Yeah, definitely. It comes down to education at the end of the day with anything. So the more we can pump out about this and kind of show cost savings potential and different cases, whether on the investment side or the back office side, the better. Just kind of casting a wide net, and if people are interested, which they are, and the institutions are definitely interested, they're coming. More so than the public headlines put on. So it's a fantastic position right now, especially given macro picture and people wanting more control and more precision behind their assets, I think is the biggest driver in general.
No, I agree. We'll get there, and
one day at a time. I think, I agree with that. Like the cost savings is huge, so institutions can see what use cases they can use the blockchain with, as well as, the other day, I saw the SEC has doubled their enforcement and regulatory division focused on all things crypto. So I think once we have clarity on all of that Wild West activities, then they'd be like, okay, the SEC has put their foot down. Now this is what we can and can't do on a very clear level. Even though this is a little bit different because they're not focused on securities, even though there's a lot of, I'm not a lawyer, but it seems like there's a lot of unregistered securities out there. I think they're focusing on everything, like from NFTs to DeFi to crypto offerings to ICOs. So I think once everything is clear there will be a very clear picture for, institutions and all parties wanting to get in this space, because it'll be like a clear roadmap. Like now I know I'm not going to waste all my resources with the fear of getting shut down or fined, etc.
Yeah, I would say that we know we're dealing in securities, and so we are following all regulations. Mm-hmm. So it's not as much of a question as I think there are some questions that some people, it looks like a security, but they don't think it's a security, or whatever the situation is. Yeah. So, and I agree with what you're saying, but I also think that within traditional, like we're working within traditional finance, and generally within, like we know we're working in the securities market. So I feel like we have more of an idea of our regulation that we're facing, and there wasn't this technology when a lot of these rules were written, and so it's just how does this apply to the current law as it stands, or the current regulation as it stands. But again, I think that the SEC and FINRA are looking to work with us, not to stifle innovation is the idea, right? To lift this up. And that's how we approach our conversations with them.
No, I love that. And you guys are innovating that for sure. As you mentioned, you're definitely a first mover advantage. You guys are definitely leading the way, and hoping that a lot more institutions follow suit and do the same process for following traditional securities laws and also adding blockchain components and evolving the financial infrastructure to where it can go. So it's super exciting to see that. I feel like we can talk all day. We can wrap this up unless you, Annelise or Peter, want to add any final thoughts.
I'm really excited. I'm sorry. We do it at Arca. We do have some new products that we're hoping to publish very shortly. So there'll be more to talk about in that sense. But it's super exciting to have conversations with these institutions that hadn't thought about it and then recognizing what can be done. So I really kind of see the course there. So I really appreciate you bringing me on and talking to me, and it's been great, Jonah and Peter. And I'm always here to answer questions or brainstorm if you ever need it.
Yeah, no, great clarity, Annelise. Appreciate you coming on. This was fantastic. I think, like you said, the playbook is coming out. You guys have some more products coming out. We're excited to see that come to market. And then obviously, pump that to our connections and make sure everyone knows tokenization is a real thing. You can do this by the book, compliantly, everything like that. So I'm very excited.
Thanks so much.
Well, thanks for coming on, Annelise. Next month, we'll be joined by another Arca representative, really diving into the various product level and operational use cases for tokenization technology. And be sure to subscribe to Security Token Market on YouTube, and we'll see you next month.